Today is Tuesday, December 2nd, 2025, and I know I'm a little late again on the uploads, but I swear yesterday I recorded a video, I had it ready, but then when I went to go pull the video, for some reason it just didn't save. And this issue has been going on with my iPhone for a long time now, and if it's not yet obvious, I use the screen recording on my iPhone to record my videos. And on my last one, if you guys haven't seen that one, it's like mostly screenshots because this issue has been going on for a while now. So it is what it is. I guess it's a sign for me to finally upgrade my setup because I've been talking about it for a while now, but it just hasn't happened. So maybe this is like a sign from God or something. But I also have this little conspiracy theory that I've had for basically my whole life, which is Apple will purposely just kind of not fix little issues here and there, or maybe like place little issues here and there that are not serious issues, but are minor inconveniences to try and get you to upgrade to the new iPhone and boost up their numbers. It's just a little conspiracy theory that I've had basically my whole life. I don't know how many of you guys remember, but I think it was the iPhone 6 something where the battery had issues. I know a lot of people were complaining on that. It was big all over the news, but then they took away the headphone jack. And I remember my little iPhone dongle that they used to put inside the iPhone package back when they actually put accessories with your iPhone. I remember that it would just kind of be off. Like it would randomly disconnect because I still back then used wire earbuds, right? And I would try to still use it with my new iPhone. But for some reason, that little dongle just wouldn't work sometimes. And it was also about the same time when they released the AirPods. So I just always had that conspiracy theory in my head all throughout my life. And now this whole screen record thing, this whole screen record issue is happening. And I haven't updated my iPhone yet, so that's probably the issue. But it's just taking me back, back when I was younger and I had those little iPhone, Apple conspiracy theories. But anyways, back on topic. So bear with me. It's going to be mostly screenshots. And I know it sucks because I want to like interact with the screen while I'm talking, but it is what it is. So today my account is hovering at around 270K, up slightly above 1%. At the close, it actually was up over 3% earlier today, like around 2 o'clock and in the morning time. But it did give up most of its gains. Robinhood did very well today. But for the past week, I am up slightly above 7%. For the month, I am down slightly more than 9.5%. And for the past 3 months, I am up slightly more than 15%. Year to date, about 118.66. Past year is about 115.86. And then of all time, slightly above 440%. And for since this month is December, I know I usually post the how much I made in the month of, but for this one that's going to be at the end of December or like start of January, I'm going to do like an annual review. So I'm still going to post like how much I made month of December 2025, but it's going to be combined with like an annual overview. So that'll be kind of interesting for you guys to look at. And not only will I be going over the numbers, but I'll just kind of go over like my year in terms of my thought process, the videos I posted, and the actions that I took. So like, for example, one that I'll throw out and I'll also talk about in this video is I used to post about like 2 or 3 months ago. I posted a lot about the clothing stocks that didn't really get a lot of views. Not a lot of people were talking about them. Some people on X and on YouTube would talk about like the retail stocks, but basically didn't really get a lot of traction. But the stocks did, definitely. The stock prices did, but just not a lot of views, not a lot of talks about them. But now, more recently, it seems like Kohl's, American Eagle, a lot of clothing stocks are doing a lot better. Obviously, Nike is still just hovering around, not doing anything. But when I posted that swing idea, I did buy calls in my smaller speculative account that's on E-Trade, but I didn't go as hard in my Robinhood account, my main brokerage, and that definitely would have helped me out, especially on a day like today when you have American Eagle up above 14%, probably 15%. It definitely would have helped out, but it is what it is. If we take a look at my current option positions that are open, I did open a cash secured put on Sprouts Farmers Market. So I took a look at the stock price, the chart. It is hovering at around some moving averages. I can't remember them off the top of my head, but the higher time frames, there you have some moving averages that might be support. There's also a very nice gap. Looks like there's resistance at $100, so we might revisit $100 here shortly, maybe beginning of 2026. And fundamentally, it's also a decent company. I mean, it's a grocery stock, right? And it's part of that healthy trend. So it's like the best of both worlds, where it is like a quote unquote stable grocery stock, but it's also backed by like this trend of healthier eating. And I believe their free cash flow per share is around like $4.50. So it is about like a 5% cash flow yield. That's not the worst that I've seen. Definitely, for a grocery chain, a 5% yield, most people would be happy with that on a REIT, right? A dividend stock. But I'm getting that on a very decent grocery chain. And plus, you guys will see here shortly, but the option premiums are pretty high up there, expiring in less than 2 weeks, I want to say, or basically 2 weeks. So I went ahead and made a move on that. I do have 2 cash secured puts open still on Nike. I still have my covered calls on Palantir, of course. I'm expecting Palantir to come down a bit 2026, so I probably will be able to keep 100 shares. Probably that 160 strike will either expire worthless, or I'll just be able to close it out. Or maybe I'll roll it into next year and then it'll come down and then I'll be able to cash out then. But that $100 one, I'll take a look at the contracts to see if I can roll it out, the closer we get to February. But most likely I'll just have to give that up at around 10 grand or maybe slightly above 10 grand. But I collected a lot of premiums on the way too, so it probably evens out. But crypto today, very nice day. Solana hit 10%, ETH hit 7% today. And I almost bought the exact bottom, almost. I didn't perfectly time it, but I am up about 5% on that 0.1 ETH that I purchased. So I am a little bit happy about that. Not too much. I mean, it's not even going to make a dent in my account, but it's honestly the little wins that keep you going. Robinhood is up above 2% today. Nike just hovering around, but nothing else really notable happening today. And as of right now, Robinhood is hovering at around 125, 130-ish. Definitely, if it makes its way up back to all-time highs and breaks that, I will be going hard on covered calls again, pause. But I probably will still dabble in some covered calls the closer we get to 150, 140-ish, somewhere around there, just to protect myself a little bit. Like I said, it is a very large portion of my overall net worth. I'm up above 1,100% on it. But I honestly don't know which direction Robinhood is going to go in the short term. It could just go up and make new all-time highs, or it could go right back down to 100. I honestly can't really tell you guys at this point. I did, used to set price targets along the way. Back when I purchased Robinhood at $10 a share, I'd set price targets like 20, 25, 30, 50, 60, blah, 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 85, 100, 120. But now that we're at like this, it seems like a peaking time, right? Not just in Robinhood, but in the overall markets. I don't really have price targets for you guys. Robinhood could go down to $100 or $85 a share, or it could just make new all-time highs and go to 200. So that's honestly the two options, either 200 or 100, and of course 85. But if we take a look at my recent transactions, I do have some decent dividends on the way from Nike, but I did go ahead and sell that cash secured put for slightly more than $300, and then I purchased $250 worth of SFM. So it's a very small position that I'm starting, and it probably will run up to 100 here shortly. I'm hoping it doesn't happen because I only have $250 in it. It's only 3 shares, so I'm kind of hoping that doesn't happen. I really want a big position, but I also I'm hesitant once again to expand my margin, and I already have a cash secured put on it, so I might get assigned shares. So I'm just kind of in that weird zone right now. But I did also close my Robinhood covered call. If you guys take a look at my year-to-date gains, according to Robinhood, or calculated by Robinhood, I did make about $60 I guess minus $8. So it's around 50 something dollars that I made on that recent Robinhood covered call, which is not the worst position to be in, because when I was looking at some screenshots on X, a lot of people were down pretty big. They sold a covered call back when Robinhood had that really bad day, and they collected like maybe $75, $100 chump change, right? Just to sell a Robinhood covered call and quote unquote hedge. But then Robinhood rips back up, and their covered call that was worth $75 is now down like $1,000. So that just goes to show you that you probably shouldn't sell covered calls on a red day, especially on a very good company, right? But I sold my covered call back when I saw everybody with those big losses, and it was on that big green day. So that's when I sold just like one or two covered calls, and then just collected my $50. Now, when it comes to some interesting news that I saw on X, this is from the Bessie letters. Sorry if I mispronounced that. It's a very decent news account on X if any of you guys want to follow. But for all of my listeners, he posts a chart of the Japanese government 10-year bond yields from TradingView. And of course, back in 2015, 2018, 2020, around there, interest rates on the Japanese 10-year were around 0 to negative 0.2%. And then more recently, it's at 1.84. So from our perspective, it might not seem like a big deal, because in America, if we got, if we took out a loan at 1.84%, we would be ecstatic, basically free money in American dollars. But to them, they're used to 0% yields, right? Or even negative yields. So to now have a positive interest rate at 1.84% is kind of a big deal for them. And there was this very good post from the Trueflation X account, which explains why this is such a big deal. You guys can either read it on the screen or go check it out for yourselves. Trueflation is it's another very good X account to follow. Unfortunately, I am not sponsored by anybody. This is just the news that I see on my X. But basically, big institutional investors will borrow money in yen, right, from Japan, where interest rates are very low. As you guys saw, it's like 0%, or it used to be. And then they take that money and invest it in the US, where we have positive yields. And the reason why they pull money from Japan, or at least this is my interpretation of it, is Japan is seen as a quote unquote more stable country, right? More stable currency. So they'll borrow money at 0% or 1% yields from Japan, and then they'll bring it to the US, lend it out for 3, 4, 5%, right? And they collect that spread. But now that rates are climbing up, a lot of borrowers might be underwater, so they'll start selling, and that selling pressure causes asset prices to go down, which triggers even more selling. So we could potentially see a lot of people owe the Japanese a lot of money. I honestly am not sure about this happening, because a lot of people on X have been talking about this and expecting this for a long time. So the likelihood of this happening is a little bit lower, in my opinion, right? Obviously, the longer it goes on and it doesn't happen, people start getting complacent, and then it could happen. But basically, all you need to know is if this scenario does happen, where people just start selling like crazy so that they can bring money back to Japan and pay off their debts, and asset prices are at like record lows, that is going to be a generational buying opportunity, because the types of people that borrow at very low rates, right, with big money, these are whales, institutions, and whenever they start selling and panicking, that is definitely going to move the markets a lot more than retail investors ever will, right? Because retail investors, I would say we could probably move the market like maybe a 5%, 10% correction here and there, maybe, right? That's pretty hard, because retail is so small. But when it comes to big crashes, that's going to be institutions and whales that are over leveraged, right? They're in debt because they pull cheap money from Japan in yen. They do all these crazy things thinking that it's easy money. And then boom, as soon as they get complacent, they think it's easy money, they start losing. And whenever big institutions and whales sell, that's usually when you get the big moves, right? So just be on the lookout for that if it does happen. probably a generational buying opportunity where we have a wealth transfer from large institutions in Wales down to us little guys that have been waiting for that opportunity. And obviously, you're going to have other big institutions that are going to short it and make a lot of money off of it. But I'm just saying for us, all we can really do about it is just wait and take advantage of it. But the next post that I thought was interesting was from The Morning Brew. This is basically a post about Gemini surpassing ChatGPT in terms of time spent on the app. So people are spending more time on Gemini than they are on ChatGPT. But when it comes to app downloads, ChatGPT is still in the lead, but Gemini is catching up. So unfortunately, I don't own enough Google, but it is good to see that Google is prospering. A lot of people were doubting them, betting against them, but it seems like they're doing all right when it comes to AI. And in other news, a post that I thought was kind of sad, but also interesting enough to talk about. This is from FT. I'm assuming it's Financial Times. Correct me if I'm wrong, but it is from the Luxembourg Income Study. And the post is on the Unusual Whales X account. But for all my listeners out there, this is a chart showing the percentage of people between ages 20 and 24 who are neither in work, seeking work, in education, or raising children in the UK and US. So both charts starting from around 2000 all the way up to today. On both charts, the chart is rising. So I know a lot of people like to talk about just young men specifically, right? And I'm sure if we had a chart of young men in UK and US who are not in work, seeking work, or raising children, definitely that would also be in an uptrend. But I thought this was a little bit more shocking because this is, I assume it's including young women as well. So young women also who are neither in work, seeking work, in education, or raising children is also going up. So it is kind of alarming. The chart for UK is definitely steeper than the US, but both are unfortunately going up. So it is something to look out for. But moving on to the next post that I found interesting. This is from Trend Spider on X. He says 8 straight profitable quarters and building above prior resistance. SoFi has the winning recipe right now. And for all my listeners, this is a chart of SoFi stock. Basically, it's an all-time chart. And as of right now, or not right now, but recently, it has come down to a very long time frame support zone. And he's stating here in the post, fundamentally it's getting better and technically it's looking interesting. So it possibly could be looking good for SoFi. And to kind of touch on that previous post with the UK or young people in the UK and US, we have another interesting post from the Kobesi letter. He says the US unemployment rate will keep rising. The gap between Americans saying jobs are plentiful versus hard to get fell to 9.7% in November, the lowest in 4 years. Perceptions of the job market have consistently deteriorated over the last 3 years. Historically, this metric has been one of the earliest signals of rising unemployment. Meanwhile, continuing jobless claims reached 1.96 million in the week ending in November 15th, the third highest since November 2021. To put it simply, finding a job in the U.S. is still becoming more difficult. The Fed has no choice but to cut rates again. And he also includes a chart from the Daily Shot. And for all my listeners, it is a graph stretching back to, I want to say, it looks like 2015, maybe 2010. But the black line is jobs hard to get, less jobs plentiful. And then the blue line is unemployment rate. So it looks like they trend together. But more recently, it has been in an uptrend. So starting from approximately 2010 all the way down to 2020, it was in a downward trend. So jobs hard to get, less jobs plentiful, unemployment rate was coming down. Both lines were coming down all the way to 2020. And then obviously 2020, we had that massive spike. So people were saying jobs are hard to get, unemployment rate was spiking, but then obviously came right back down as we reopened and the stimulus packages. But since then, we have been in a consistent uptrend in terms of jobs hard to get and the unemployment rate. But in other news, we have this post from Bloomberg Japan talking about how Costco has filed a lawsuit against the U.S. government to seek refunds if the Supreme Court determines the tariffs were invalid, right? So you could look at this both ways. You could look at this as motivation for the government to not make the tariffs invalid so that the government doesn't get sued by a whole bunch of companies, or you could look at it as the government kind of wants to do an indirect stimulus of companies, so they'll just kind of let it happen. If the tariffs become invalid, right, all those refund checks hit businesses, so it's like a business stimulus package almost, and it might be positive for the stock market. So you could look at it both ways, but definitely something to keep an eye on. But we have another post from the Kobeissi letter once again stating that the Federal Reserve has officially ended quantitative tightening, or QT. Definitely one of the reasons why the market and Robinhood has been up today with Federal Reserve ending quantitative tightening. So money is going to get a lot more accessible, or at least for the stock market's perception, right? But I do think in the short term, it could be bullish for the overall markets and Robinhood stock. But we have this other post that is from Geiger Capital. He says new 2025 highs for Brazil. Ticker EWZ is up 50% year to date, and the S&P 500, or ticker SPY, is up 17% year to date. So golden age of LATAM. And unfortunately, the ticker EWZ is another one of my biggest regrets of not buying more of. I do have like a very minuscule amount. I bought like one share of my IRA just because of how small it is, and then I have a little bit in like separate accounts, like some Brazilian stocks, but definitely I did not buy enough. Up 50% year to date, and that's before the dividend yield. So at the start of the year, before this massive run, I want to say EWZ was like 7%, 7.5% dividend yield. So definitely a big gainer, even for the long term, right? Because if you're up 50% and you decide to take profit, you take your principal out, you still have 50% of that 50% of profit that you gathered, and you're collecting that dividend yield on that profit. So it's literally straight profit, and then you're collecting dividends. So definitely it was a good trade that I missed out on, but we'll see if the trend will continue here. And when it comes to comments on my previous videos, I don't think I got too many here recently, but we do have one long one from TDTY saying, I swear I'm gonna catch you one of these days, bro. It's been fun. Low goal of mine trying to catch up with you. It's hard since we have the same amount of Hood shares, but using premium and going heavier in other tickers besides Hood. I'm actually decently close with current port sitting just under 2 at 20K, 2,500 shares total between my stocks I'm currently in. Started the year with only 80K after being smacked down from tariff dip. However, made tons of good trades this year. If this bull run can continue, especially in an AI, I can probably catch up to you by mid 2026, if not sooner. It's never a competition, just a little fun. Just fun little thing I'm trying to do since we like a lot of the same names. But wish you all the best, brother. Keep grinding. This is my second year really of trading with $250,000 port at 23. I'm doing pretty good. So definitely you are doing pretty good. I mean, it's only your second year. You're 23 at 22 or 220K. So definitely you are doing pretty good. But keep in mind, just because you're high beta and possibly using leverage, that doesn't mean that you're going to always outperform the market, right? You're going to outperform the market during very bullish periods because you're high beta, possibly leveraged. But also keep in mind, it can flip very quickly, as you saw with the tariff dip. You and I were both in the 80K range because I guess we have like similar portfolios, because you're at 220K. Most of it probably is in Hood, and you also dipped to 80K during that whole tariff drama. So it looks like we have similar portfolios. But you got to be careful of this mentality of trying to catch up and always go for new all-time highs, because if things flip around next year, you can go from outperforming the market to tremendously underperforming the market very quickly, as I did back when we had that interest rate bear market, 2022, 2023, when Robinhood was like $8 a share, definitely I was underperforming the markets. But thank goodness Robinhood, Palantir swung right back up, and now I'm tremendously outperforming the market. So you can quickly recover, but you can also quickly lose it all. Just keep that in mind.